like Wall Street better watch out, because lawmakers say they're passing a bill that's set to overhaul the country's financial system by curbing Wall Street's power. Now, the bill is expected to be on Barack Obama's desk by July 4th. In the meantime, the Democratic-backed jobs bill was killed in the Senate. Well, investigative journalist and author Webster Tarpley is here for more details on both pieces of the legislation. Hi there,
Hello.
Webster. So what is so special about this, reform bill that you have lawmakers and President Obama saying that we need this in order to prevent a future crisis, that this is going to prevent any other economic crisis from happening?
Unfortunately, it won't. I would say this is a complete triumph of the Wall Street derivatives lobby. It's a sellout so bad it's grotesque. Even cynics are astounded by the impudence of the U.S. Congress. Just a couple of things. They wouldn't say that a stockbroker has to pursue the best interests of their own client. They wouldn't do anything to stop rip-offs on the financing of used cars. There's nothing to limit interest rates on credit cards or payday loans. There's nothing on foreclosures. There's no cap on leverage. You can speculate all you want. There's nothing to diminish the power of the Federal Reserve. They've even gained in power.
Well, it's very interesting because experts have said that, Barack Obama wanted this thing in the bag, so when he gets to the G8 and the G20 summits in Canada, he could sort of wave this in their face and say, hey, look what my country did. It's time you guys reform your institutions.
Look, it may not pass. That's always the hope, that there'll be a rebellion of the rank and file and
Well,
the backbenchers. Look, we're in a depression.
Most people are thinking it will.
Well, who knows? Bush had some surprises, Bush the elder. It's a depression caused by banks and hedge funds speculating with derivatives. That was the banking panic of September '08. This does nothing. There are no bright line prohibitions. There are no penalties. Now, there was one attempt. Senator Blanche Lincoln, paragraph 716, she said, we want to prevent banks from dealing credit default swaps, at least. There's nothing about collateralized debt obligations, what brought down Lehman, Citibank, and Merrill, but at least credit default swaps, what brought down AIG. In the night, last night, the crime was done. Congressman Peterson of Minnesota came forward and said, look, we've got a compromise in a back room, not on TV, who said, look, we're going to have foreign exchange swaps and credit derivatives and interest rate swaps all allowed for banks. So it means that Blanche Lincoln's measure is gutted. There was one other serious thing, the Volcker rule. And that said, commercial banks can't do speculation, proprietary trading for their own account. You remember Scott Brown, the candidate from Massachusetts who drove a pickup truck to dupe the voters? He just took his pickup truck and drove it right through the federal, the Volcker rule on this bill. So now they can do 3% of their capital in a hedge fund and speculate with that, which means they can lose 200 or 300% of their own capital and be completely bankrupt. And if that's not enough, there's also this quibble about proprietary trading and market making. Where's the line? There's going to be a study group to decide that, so that will take several years. And in the meantime, I think a lot of these banks will go bankrupt based on speculation.
So you're saying Wall Street emerged as a winner here, which wasn't supposed to. But what about the Federal Reserve? I understand that the Federal Reserve under this bill is actually going to get more power, so we can consider them a winner too.
I mean, at the beginning, there was a tremendous resentment for the failure of Bernanke. At Helicopter Ben struck out completely. Now he has more power. But in terms of this, what do you think Goldman Sachs is paying Obama for? How come Wall Street gave more money to Obama? He is in the pocket of Wall Street. And, of course, Senator Dodd is headed for Wall Street. Barney Frank, bailout Barney, they're all in the same boat. And the Republicans act as if a hedge fund is just a mom-and-pop Main Street business that deserves to be able to hedge. I mean, it's a complete mythology going on.
It's probably an oxymoron, right? Hedge fund and mom-and-pop shop?
Doesn't go together.
But, Webster, I want to juxtapose, this bill with the jobs bill. The jobs bill killed in the Senate.
Right.
This one was more successful. I mean, talk about these two things because, a lot of Americans are out of work right now. So wouldn't they like that piece of legislation passed also, but then you have the Republicans saying we got to cut spending, this is getting out of control.
Right. And the Democrats not fighting for it. Obama didn't fight for this. Here's what it is. It was an attempt to extend unemployment benefits beyond about a year. As it is right now, this has failed. 1.3 million hardworking people who are unemployed are going to be destitute at the end of this month. Isn't that great? $24 trillion as a line of credit for the banks under the various bailouts. But no, we don't have $20 billion to save 1.3 million wage earners and their families from being destitute. They're going to lose their homes. They're going to lose everything. Then there was supposed to be about $20 billion to save 300,000 teachers from being fired. That's gone too. And other provisions, policemen, firemen, and other things. So the reactionary Republicans get up there and say, oh, no, we would never vote for a spending bill unless it's paid for. Hey, how about everything Bush did? How about the wars? How about Afghanistan? Are you going to apply the same thing? No, not that. So it shows this is what you get, a Congress and a president who are so controlled by lobbyists that, again, if this weren't so tragic, it would be comical.
Well, you know, it's interesting because I mentioned this to Joe Weisenthal earlier today. He's the editor of the Business Insider. And, you know, you hear Speaker Nancy Pelosi say things like, you know, we're going after the rich. You know, the middle class is not going to be taxed. You know, whatever jobs bill is for the middle class. But how do you define what is rich and what isn't? Because in their terms, it's someone making over $200,000 a year. If you're living in New York City or even Washington, D.C., and you're making that amount and you have a family, I don't think that's considered rich, and I think you know, many people would agree with me. So who is it there, whether it's on the Hill or in the White House, that says this is rich, this is middle class, and this is poor, and we're going to help only these people in the middle?
This is the demagogy of Pelosi. In other words, in order to do the crimes that she does, serving Wall Street, she's got to throw up this screen of some kind of radical populist rhetoric, which again turns out to be basically worthless. She is delivering for Wall Street, Dodd, Frank, and the rest of them. There was some resistance. Blanche Lincoln tried to do something. Tom Harkin of Iowa was trying to fight against derivatives. But basically, you also had a group of about 100 Democrats in the House, the so-called Blue Dogs or New Democrats. They were all pro-derivatives, and a lot of them from Massachusetts, Connecticut, and New York. They were writing letters saying, we got to keep these derivatives. They are great. Yeah. That's how you get the risk that's going to blow apart the banking system next time around. So Pelosi has completely failed to do anything for the American people. And you can see she can pass what Wall Street wants, but a simple measure to save 1.3 million people from destitution, that's too much for her. She can't mobilize for that. Same thing for Obama. Let's hope it's defeated.
Investigative journalist and author Webster Tarpley keeping those lawmakers on Capitol Hill and Obama administration officials in check there. Well,